Yes, hi, this is Simon here from Fishbowl Inventory. This is a quick recap on our recent Masterclass webinar session that we had a little technical glitch on our side and forgot to record. So there's been a few requests from some of the people that sat in on that webinar to just recap what we covered with inventory reconciling between Fishbowl and your accounting system, and also the different processes with doing stock takes with Fishbowl, especially over this quieter December Christmas period, and what clients can do to do their cycle counting. So let's jump over here into Fishbowl. And firstly, let's talk about going through the accounting side of Fishbowl and making sure that what we see in our inventory valuation in Fishbowl is what we're showing in our accounts. So it doesn't really matter if we use Reckon Accounts Desktop, QuickBooks Online, or Xero. The process of making sure that Fishbowl equals your inventory reporting in your financials is the same. So what we need to ensure on a periodical basis, now I do recommend that this reconciliation is done monthly, if not even more often than that, but probably don't leave it to an annual reconciliation, because what you do find if you look at it once a year, say at the 30th of June, is that if there is mistakes between Fishbowl and your accounting system, trying to find those mistakes in a 12-month or longer period is like finding a needle in a haystack. So the more on top of this you are, the easier it is to find when a mistake does occur. So what we're talking about here is when Fishbowl is your inventory system, we have a value of stock on hand, right? Now, that can be found at any point in time, or as of right now, by running in your reports, going to your inventory folder and running your inventory valuation summary report. The other one that can be useful for some companies, if you do post your inventory value to multiple balance sheet accounts, such as raw materials and finished goods, is this one here called Asset Valuation by Account. Although just for those that aren't aware, this report that I've got on the screen at the moment, the inventory valuation summary, can also be filtered by individual asset account by running the modify report and putting your asset account in here. So you can run a report for each asset account and balance them off individually. So what we're trying to see here with our stock on hand values is I have a total or grand total stock value of $968,293. Now, when I compare that to my accounting system, now for this demo, I'm using Xero. Xero is probably the most popular accounting platform we connect to these days. But if I jump over here into Xero and go into accounting and go to my balance sheet and run my balance sheet as of right now, so I'm going to run it as of today and update that balance sheet report. What I should see in my balance sheet is an inventory asset right here under my current assets. And I can see here the balance I have is $968,293 and 23 cents, which is exactly what I have here in Fishbowl. So that's what we want to see. Now, in real life, that's very rarely the case. Now, there is a reason why it should always become out by a little bit. And that reason being is all the accounting systems that we integrate with, so Xero, QuickBooks, and Reckon Accounts, when they do journals to and from the inventory asset account, they are always to the number of cents, so 2 decimal places. However, when we're looking in Fishbowl, if I jump back into Fishbowl here and go into my inventory, we will notice whenever I look at a stock item, the average cost that I'm holding against each item is to 5 decimal places. Okay, so when you have transactions with larger or smaller quantities, and every time we do an entry, we times that quantity by the average cost in 5 decimal places, what we can end up with is a variance between the entry in the accounting system and the total valuation in Fishbowl of a cent or two on each item. So when you multiply that over your SKUs, the number of transactions that you do over a given period, say a week or a month or a quarter or a year, your inventory asset is going to drift apart a little bit because of those rounding on those entries. So what I do recommend that you do is, if you're reconciling your inventory once a month, is that you run your inventory valuation report and do a small journal in your accounting system. Should be within a few dollars. So every business has a little bit of different, what they would consider acceptable rounding. But do a journal to bring your inventory asset back into line with your inventory valuation summary report. Now, another point to make with this inventory valuation summary report is it's always run as of right now. So what happens if the end of the month falls over the weekend or a day that you're away? You want to make sure you have out of Fishbowl an exact snapshot of this report as of the end of the month. So the best way to do that is by going up to Setup and Schedule and creating a scheduled task in here to automatically run this report or email it to yourself. So I could call it inventory valuation report. I'll try and type it correctly here. Let's fix up the spelling. Let's copy that down to the description. I'm just going to save this on my desktop. Obviously, you'd want to save that into a folder that's accessible on the server or on a drive that you will have access to. I'm going to save this report out of Fishbowl each month as a PDF format, and I'm going to call it my inventory valuation summary. And the report that I'm running is going to be the inventory valuation summary report. There it is right there. And I'm not going to bother emailing this to myself, but I could by putting my email in there. But by not putting an email, it's just going to simply save a PDF copy of that report into this folder. Okay, I could apply any filters, such as if you're running the report for each asset account, as we mentioned earlier. And I want to say to run this report monthly on the first of each month at 1 a.m. So effectively, it's going to run at the first of each month, which should pick up any transactions as of the end of the last month before you have a chance to do any transactions in the current month. Okay, and by having that schedule sit there, we're always going to have a true PDF of what the stock on hand was in Fishbowl as at the end of each month. And we can use that report to balance off to our balance sheet. Now, the next little part I want to talk about is for our QuickBooks Online users and our Xero users. Now, that's got in regards to inventory that's been received and not yet reconciled. So if you've raised purchase orders, gone into receiving and received POs, like I have a bunch of received POs here, but I haven't yet reconciled them, the value of that stock that's been received in is going to be showing in a liability account on your balance sheet called holding account, or I like to rename it to goods received, not invoiced, so it's more explanatory of what it really is. Now, Reckon accounts users, you don't have that account because Reckon has a function called item receipts. So this is only for QuickBooks Online users and Xero users. But what you also want to reconcile each month, besides your inventory value, is that the stock that we're showing as waiting for a bill balances to our liability. Now, there is no standard report in Fishbowl that shows that value. So we've written a custom report, which we're happy to share with you. So if you need this report, just reach out to our team and we can share it with you. But I've written a report here called items received, not reconciled. And what it's going to list, if I run this report right now, is those purchase orders that have been received, but I have not yet put a bill in for them. And I can see here the total value of stock that I've received, but not yet reconciled, is $10,432.96. Sorry, there was a second page. Yeah, there is there, 94 cents. And if I jump over here into Xero and go down my balance sheet a little bit further, here's my goods received, not yet invoiced. And I can see it's also 10,432.96. 10,432. Oh, I'm out by a few cents there. So it looks like I might have a transaction that's been a little bit different in that account. Not sure what I've done there, but I must have sorry, 10,432.96. I wasn't looking at the last page. So you can see here that balances off perfectly. So 10,432.96. Sorry, it doesn't, it's out by that 80 odd cents. But what you do want to do is, again, journal that back into line and ensure that the stock that's showing as received, not yet reconciled, balances off to your balance sheet. Okay, so they're the two things we need to do to make sure that our inventory is reconciled. Now, besides rounding, there are some other things that can cause those two things to be out. So if you do find you're out by a larger amount than rounding, what do we look for? So let's just quickly go down them. Firstly, it's if we have any inventory items in Fishbowl that are incorrectly mapped for their asset account. Now, what I mean by that is every single item in Fishbowl or part number has, under the account mapping, the asset account that it's linked to. Now, let's say, for instance, a user had accidentally made a mistake and put that to cost of goods sold. That would mean when I bought this inventory item in, it's going to be showing as a stock on hand value in Fishbowl, but the value of that stock has actually gone straight to cost of goods sold and not to our balance sheet. So that would cause a mistake. So the first thing you want to do if you find things are getting out of balance is make sure that all of your asset accounts are linked to your inventory asset. Okay, now there is a way to check those accounts in bulk. You can either export your parts list to Excel, part product and vendor pricing will show you the asset account, or you can go into your reports, go to your parts reports, and there's a part accounts report here, and you can run down the asset account and make sure they're either using the default asset account, or if they're individually mapped, make sure they're all going to your appropriate inventory asset account. The next most common thing is a posting error, and then the transaction that had an issue posting across to your accounting system wasn't manually keyed into the accounting system correctly. So if you do ever have a transaction that doesn't post across successfully to your accounts, say a supplier's invoice, then you need to make sure that if we do key that manually into the accounting system, that it's keyed in exactly as Fishbowl would have done it. Otherwise, it'd be a discrepancy in your inventory. The next two scenarios that can cause the inventory to be out are transactions that occur directly in the accounting system. So let's say, for instance, over here in Xero, if I'd had a bill that had come in from my account, so let's go to our dashboard here. And if I go into my bills to pay, so let's say I have a bill here that come in today for this $500 US. So that's obviously what was put through Fishbowl, and it's come in as a bill for $500. Okay. If the accountant or bookkeeper then comes in here and realizes a mistake and edits this transaction and changes the value, then what that's going to do, that's going to change the value that shows in our inventory asset in our accounts. But Fishbowl is none the wiser, so that would cause a discrepancy between what Fishbowl is reporting and the account system. So if there is a mistake on a supplier's invoice or a transaction that's come across from Fishbowl, that fix for that value has to be done in Fishbowl and then sent across to the accounting system, so both Fishbowl and the accounts stay in check. And the other scenario that we see from time to time is quite often around year end, accountants are sometimes making some manual adjustments to the balance sheet for one reason or another. And if an accountant posts a manual journal entry directly to your inventory asset to increase or decrease it for reporting purposes, then that's going to cause that account not to balance to Fishbowl as well. So what you need to do if you find a discrepancy is go into your chart of accounts, go into your inventory asset account. Mine's called inventory asset here. Let me just find it. And go through this inventory asset and ensure that all of the transactions that you see in here are from Fishbowl. So they're normally pretty easy to see because Fishbowl puts fairly descriptive memos on what all these entries are. So you want to make sure that you don't see a direct journal or something in here that has not got a Fishbowl memo on it that would indicate that someone's put a transaction directly to your inventory asset that didn't come from Fishbowl. So there are a couple of things to look out for. And probably the last scenario, this is probably for our Xero users only, is with Fishbowl connecting to Xero, there is the option to post all transactions from Fishbowl to Xero as a draft status. And that is found in Fishbowl by going into your accounting integration screen, going to tools and module options, and under the Xero tab, check what type of status you're posting your transaction to Xero as, approved or draft. We normally recommend that you push all transactions to Xero as approved, because if they're in your inventory system, they should already be transactions in your general ledger. If you do have them set to draft, then you need to make sure that all of those draft entries have been approved on the Xero side, because until they're approved, they don't show on your balance sheet. Okay, that's pretty much the wrap up of reconciling our inventory between Fishbowl and your accounting system. So the other area from our masterclass that we wanted to recap on was doing stock takes, especially over quite a period like year end. And what we talked about was there's 3 different ways to do stock adjustments in Fishbowl. Firstly, there's the most simple process of running an inventory report and then making those adjustments manually through the inventory screen. So how that is done is by going into your reports, going into our report center here, and under inventory, running off a cycle count list. Okay. So this cycle count list can be filtered down by ABC code or location group or location. And once you have that, it shows you the expected stock on hand. So a user could print this out, go around the warehouse, do their stock counts, and for any values that were different, manually enter that back into Fishbowl. So how that is done is by on your homepage, going into the inventory screen, opening up the item you need to make an adjustment for, highlighting the location where the adjustment is taking place. And let's say here, for an example, where I currently show in Fishbowl, we have 12 of these sitting in this location. I can hit cycle count over here, enter in my counted quantity. Let's say it's 10. I could put a note, reason for difference, if there is one, and finish that adjustment. And now you can see Fishbowl is showing that we have 10 on hand, and a journal is going to go across to our accounts for 2 times the average cost of that item. Okay, So that's a manual way of doing adjustments. Obviously, it's going to take the most time, but if you're cycle counting a small section and there's very few adjustments, it's probably not a bad way to do things. The second is via a complete import and export of our cycle count data via Excel. So what we can do here is go to File, Export, export our cycle count data to Excel. So let's just do that right now. I'm going to drop it out to my desktop. And I'm going to open up that file. So here we go here. Here is my current stock data out of Fishbowl. So what I can do with this spreadsheet is go through and amend the quantities and then load it back in. Now I've got things with serial numbers where you have to actually list the serial numbers. So if you have 2 of these, you have to list the serial numbers that adds up to 2. But I'm just going to simplify this down just a little bit so we have a nice easy sheet for me to go through different scenarios with. Let's delete that and let's delete everything else down the bottom, which I've got all sorts of stock in here. Okay, so let's now talk about the scenarios. You'll actually notice each line in this spreadsheet is the quantity, the location, and also any other things such as notes or tracking. What you've got to be careful of is if you're just doing a single count in a single location, it's fairly easy to adjust. So let's stick with our B200s here. Right now it shows in Melbourne receiving, I have 270 of these. If I do a cycle count and I have 275, I can simply amend that quantity. Now Fishbowl is going to match that new quantity to that location and adjust for the corresponding 5. Okay. What you have to be careful of is if you count that stock in a different location. So let's say here in Sydney, I'm currently showing let's stick with this quantity here, 350 in Bay 100. Let's say that that 350 is in Bay 200. I can't just do that, change the location name to stock 200 and leave the 350. Because what that's going to do, it's going to add 350 units into that location, but there's nothing in our spreadsheet now adjusting stock location 100 back down to 0. So if stock is in fact in a different location, what you need to do in this spreadsheet is insert a row, copy down, put the second line to the new location. There's my 350 in Bay 200 and change Bay 100 to 0. And there has to be that 0 line. So what this is going to do by having that is it's going to cycle count this bay down to 0 and increase stock in this bay up to 350. So it's really important to look at the location and adjust it down accordingly and up accordingly if you are moving stock around via a cycle count. The other thing to be aware of is when you have quantity committed in Fishbowl, that means you've picked the stock for a transaction, but you haven't yet consumed it, is I can't cycle count that down to 0. You can't have less stock on hand that you've currently got picked and set aside for a transaction. So you've also got to look at this quantity committed here, okay? So we make our adjustments. Now, by the way, another little tip, I've so far only adjusted this line and these 2 lines here. If they were my only stock adjustments, technically I could remove the other lines out of the spreadsheet. If there are no changes, I don't necessarily have to upload those lines back into Fishbowl. Now, what that does by removing those lines, it means that I have less chance of making a mistake. And it also makes the upload a lot faster if you are dealing with a large stock list. So I could remove that line and remove all these lines here as well. So a little trick there is go through as you're adjusting them, and anything you adjust, make a different color, and then get rid of all of the things you haven't changed the color of. So if that's all of my cycle count data, I can save that. And to import that back in, I go up to File, Import, my cycle count data, grab it off my desktop. There's my 4 rows. Now be aware when it gives you the number of rows to load back in, it is including the heading row. So there's 4 rows of data in this spreadsheet. Okay, hit finish, and that adjustment's done now. So if I look at my B200s, I can see my Melbourne receiving has gone from 270 to 275. And if I look at my B201s, my B200s it was still, I now have 350 in stock location 200, and the 350 I had in stock location 100 have been cycle counted out. The other thing I do recommend when importing a spreadsheet is you've got to remember when you load that spreadsheet back in, it's comparing the numbers in the spreadsheet to the stock on hand in Fishbowl as of right now. So if you exported that spreadsheet cycle count data out on a Monday and don't load it back in until the Wednesday because you're doing a full stock take, you've got to make sure within Fishbowl you're not doing any transactions because it's matching the quantity in that return spreadsheet as of right now. It is not looking at what the stock on hand was a few days ago. So you've got to be careful that it's always comparing the numbers as of right now. And the last thing that I suggest is once a stock adjustment has been done, you always run a report to see what stock adjustments occurred in the system. So you can find that by going to reports, going to the accounting folder here at the top of our reports module, and we have an adjustments report here, which shows me the stock adjustments that have been done. And you can see here the entries that I just did from the spreadsheet, as well as the -2 that I did through the software directly. Okay, so these most recent adjustments right here on the 7th of December. Okay, the third and final way of doing stock adjustments in Fishbowl, which is personally my favorite, is using Fishbowl Go, which is our tablet or our scanning app that can run on Android or iOS. So over in this window here, I have our Fishbowl Go software. There's a whole bunch of functions you can do through Fishbowl Go. So if you don't have Fishbowl Go, it's probably the most productive tool we have working with the software to ensure that things are recorded out in the warehouse or the factory live in the inventory system. And when it comes to inventory, there is no substitute for recording information live. It just makes the system so much more accurate. But what we want to cover off here for stock takes is our cycle counting on the scanner or a tablet or a phone. So to paint the scenario, let's say a staff member's got some time to cycle count down a particular area or row in the warehouse. What they can do on the device is go into the cycle counting module, and this is the data that gets to be filled out. The first thing they need to do is say what location they're standing at. So if I just go back to my inventory module here, we're going to adjust this stock sitting here in stock 200. So they would walk up to a shelf and either enter the shelf name or scan the barcode, because in Fishbowl, if you do set up locations within the warehouse, you can print out all your barcodes for those locations and stick on the shelves as well. So I'm going to walk up to a shelf and I can't scan on my laptop, so I have to type it. Sydney-stock 200. I scan the item or I type in the item code that's sitting on that shelf. In this case, it's B200s. I can either, it tells me here below the part number how much inventory I'm expecting that location. It tells me here there's currently 350. And what the user can do is either count manually and type in the quantity they counted, or if it is barcoded, they can beep that barcode repeatedly to count up to the stock that's on the shelf. So I'm going to say there's actually 348. Again, I could put a note and I can record that cycle count. And what you'll notice back in Fishbowl, if I just refresh the screen, my stock adjustment is live, okay? And if I look at my inventory adjustments report again, and refresh that, there's my adjustment note for the two I just did. But physically what's happening out on the floor is a user walks up to a location, scans the location, scans the item, does the count, moves straight to the next bay and continues. And the great thing about using that, that cycle counting live on the floor as you're standing in that bay, no other staff members within the business are going to come in and steal the stock out from under that person's nose as they're counting it. So you are truly comparing what's on the shelf to the inventory system without the risk of a transaction occurring in between those two counts and causing a discrepancy. So that's the three ways of doing a stock adjustment in Fishbowl. One at a time through the inventory screen or using a manual cycle count report, exporting your cycle count data to Excel, updating that data and loading it back in, or thirdly, using the cycle count function on Fishbowl Go to live stock take as you're on the floor. Well, guys, I hope that helps with this couple of topics we covered in the recent masterclass. Once again, apologies for not recording that masterclass webinar from the get-go, but we will make sure from now on as we run our masterclasses, they are recorded and shared with all attendees. All right, that's it. We've got a wrap, so have a great day.